In today's video, we are going to be talking about Kevin O'Leary, the master of all dividends. So today, what we're going to be talking about is some of his top 5 tech stocks that he actively invests in. So as we know, he has a tech ETF called OGIG, and basically that's the O Shares Global Internet Giants ETF. So that's where he puts all of his money. He puts it all into his own ETFs. So let's get down. Let's check out what this ETF has. So there's the top 10 holdings, but today we are going to be talking about the top 5. And these actually kind of confuse me because he is a dividend king, and yet this and a few others do not pay a dividend, which is kind of confusing to me. But Amazon is one of my top companies as well that I really like. I don't personally actively invest in it. However, when you're talking about a company that is being traded at over 3 million shares per day, 3.6 to be exact, it doesn't pay a dividend, which is why I personally don't. Right now, I don't invest in it hardly at all. I do have a few ETFs that do hold it, however, and its PE ratio has come down from where it used to be at. But you cannot deny that the 5-year chart is absolutely insane. So as we can see, over the past 5 years, it's had some pretty good growth, and then it basically did not much for a while. And now we are currently in that situation once again. So I'm not too sure how good of a stock it's going to be. It did trade within a range for a while. However, it did go up huge during the coronavirus pandemic, which is no big surprise because everyone had to order online. Nobody was allowed to go into stores. And now it's currently trading within a range again. So what to look for right here is it's trading within a range. It broke through that range once and it's dipped back down. It's really, if it can basically sit and not go lower than where it is right now, and it can bounce off that level of support, I really wouldn't be surprised if it either went and bounced off between that new level of support, or could it continue to go up higher? That is my question. We are unsure as to what's going to happen. It is currently down in the pre-market today at the time of recording this video, but it will be interesting over the next little while. Also, can't deny the amazing earnings that it's having. It's beating earnings each and every quarter. It is absolutely doing amazingly when it comes to revenue. It has done positive revenue each and every year, same as earnings. The second company is Alphabet, also known as Google. Also, its ticker is Google. So anyways, again, another one that does not pay a dividend, which is really interesting to me, but he, I guess, is going for more growth. Google is a very interesting company. If you didn't know, they actually own quite a bit of SpaceX. They have invested in SpaceX. Also, something else that I really like about Google is they are currently actively investing in trying to make the best artificial intelligence, and I personally think that is the future. The volume is being traded right now at 1.5 million shares traded every single day, which is really good. Its PE ratio is a heck of a lot lower than Amazon's, and personally, if only Alphabet was a 10th of that price, I would be currently buying a ton of it. So if they could do a 10-for-1 stock split someday, I would be in on it. But at this point in time, I would only be buying maybe 1 or 2 shares at the price it's at right now to basically open up a position, and it's hard to do that when I really look at that much money and say I could be making dividends instead. And I personally think that artificial intelligence is really going to be the future, because if we really take a step back, us as humans can only think of and invent so many things. Now, if we look at a computer and teach a computer how to do something and give it basically unlimited power with some of these new quantum computers that Google themselves are creating, we can really start saying, wow, the computers, the AI could actually teach us how to travel the speed of light or faster, how to cure cancers, how to do everything. Oh, and not to forget that hopefully the AI doesn't kill us all like in Terminator. But again, 5-year chart, very, very strong growth. Recently, because of the coronavirus pandemic, it's been really shooting up high. I really do wish I was buying it at that price because I would be super happy right now. But I didn't. I should have, but I didn't. And it's gone up huge. And its earnings has, of course, beaten expectations each and every quarter. Its earnings have been growing each year. Its revenue has been growing larger than its earnings, as we can see percentage-wise, but that's okay because they are investing a ton of money into AI, quantum computers, and things like that. Tencent is something that I would personally never invest in myself, but Kevin O'Leary did, and it's always risky. You're looking at a Chinese company, and anytime you're investing in a Chinese company, you have to really do your due diligence and know what you're investing in. But it does have a dividend of 0.25%, which is basically nothing. And it does have high average volume. But basically, I don't invest in any Chinese company at all. I try not to ever, mainly because not for being a racist or anything. No, it's mainly because when you're talking about a Canadian investing into an American stock, that's okay. We have treaties and we don't usually see Canada and US fighting. But when you're a Canadian investing on the American stock market, and then that American stock market company that you're investing into is a Chinese company, you start having issues. Because now it's not just what will the Canadian government do with the Chinese government, it's what the American company will do with the Chinese company or Chinese government. You're now looking at multiple governments trying to tick each other off, and it's just not for me. I would rather just not deal with the whole politics of just garbage. Like, the Chinese government wants to do stupid stuff to the US and vice versa, so it's just I don't deal with it. But does it raise its dividend? That is the big question, and yes, it does. We can see that it's raising it essentially every single year, which is kind of interesting and cool and to see, and I do like that part of it, but it's not a big enough dividend for me to care. It is also absolutely killing it with revenue. It's meeting, if not beating, expectations on quarterly numbers, which is good. Its earnings are going up. So this is a great company to invest in, but it's just not for me. Microsoft is another one. I also have this on my do not ever invest in list, just mainly because I don't like the original founder. However, its dividend yield is close to 1%. It's 0.9%. Its average volume is ridiculous, and it's a really good company to invest in. It's just obviously not for me once again. When we look at the dividends, it is increasing its dividend, which is very, very good. We want to see that with companies. And it is beating expectations every single quarter, which is very good. And it's also growing its revenue and earnings almost pretty well every year other than 2018. Alibaba, again, another Chinese company I personally don't invest in. This one also does not pay a dividend. However, we are looking at a company that is trading at 16.6 million shares traded every single day, so it's very liquid to get in and out of. I'm a really big fan of Alibaba's original creator, the original CEO, Jack Ma. I'm a huge fan of his when it comes to how he's speaking out against China, but I don't like how he speaks out against Elon Musk, so mixed feelings on this company anyways. But again, great growth. Currently going down. I'm not too sure. I don't really follow this company all that much, so I'm not too sure what's going on right here. Could be a good buying opportunity when you start seeing it level off, and if it can level off for a while, this could be the new level of support, so who's to say what it could be. But if it can level off here, it would be a good opportunity to potentially buy it to, again, go to the moon. So there is Kevin O'Leary's top 5 tech investments, some of which do pay a dividend, some of which that do not, some of which what I absolutely love but don't invest in, and others that I don't like and I also don't invest in. I invest in a few of these companies, stuff like Microsoft, also companies like Amazon I technically invest in, same as Amazon, Microsoft, technically I invest in that even though I'm not a huge fan of it. With those companies, it's through ETFs. I don't own them straight up. So anyways, remember to always do your own due diligence, do your own research. Don't trust a random guy on YouTube. And of course, always do your own research. You never know who's trying to push what online. Anyways, I hope that you've enjoyed today's video. Hit that like button, subscribe, go check out my favorite books down in the description below, and I'll see you guys again next time.